Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. Welcome to new all-time highs. Welcome to price discovery. Welcome to the Rekt Capital channel. We've been talking on the channel about a midterm retest of the Pi cycle moving average. This being the chart that I featured in this tweet in early August. This is a really important thing in just confirming a return to the bull market. A midterm retest of that 111-day moving average is important in confirming a bull market return, and that's exactly what we got, because once we broke beyond this resistance, what was really important was to see this midterm retest of that moving average occur, and lo and behold, we saw a curling down in price action. Fantastic retest at a higher low. We've been covering this quite consistently here on the channel, followed by a 61% move to new all-time highs to price discovery. And we are in a bull market. Historically, a midterm retest is important in confirming a bull market return, and history has repeated itself, and Bitcoin has made history by the same token, rallying to new all-time highs. I'm going to share with you in today's video some more Pi cycle analysis on where this next major target, major resistance could reside for Bitcoin in higher price regions, based on the Pi cycle historically recurring tendencies. And let's dive right into that video right after our quick sponsor. Our sponsor for today's episode is Ledn.io. Ledn offers a wide variety of financial services for long-term holders of digital assets. Ledn helps you do more with your Bitcoin through their Bitcoin savings account, their Bitcoin-backed loan program, and their B2X program. Their Bitcoin savings accounts let you earn 9% on your USDC and 6.1% on your Bitcoin. With their Bitcoin-backed loan program, you can take out a stable coin or dollar loan off of your Bitcoin, which is much more tax efficient to keep your Bitcoin exposure while gaining dollar liquidity. And through Ledn's B2X program, you can double your exposure to the Bitcoin you already own. Check out the link down below in the description and do more with your Bitcoin today. Awesome, let's dive into the video. Let's dive into a bit of historical analysis on the Pi cycle indicator. It's been a really accurate one, honestly. If you look at this local top, within 3 days, it preceded a 51%, 53% crash. The midterm retest of this all-important 111-day moving average has been quite important to securing a return to the bull market. So there is a lot of confluence suggesting to us that it might be a good idea to pay attention to this Pi cycle top a little bit closer, a little bit more closely. And what we tend to see from Pi cycle mid-cycle periods is that whenever we see a Pi cycle crash, like we saw in 2013, we see that crossover take place. But once we see that crossover occur, we then see the crossover to invalidate that once we've seen enough of a reaction from the lows to just enjoy a new uptrend. So the Pi cycle top essentially is really good at marking out local tops, but market cycle tops and local tops are a bit different. The Pi cycle top is really good at denoting tops, but they're not always bull market tops to begin the bear market. And you can see that this mid-cycle correction in 2013 is a good example of that. And this correction, which we just saw in 2021, that's also a really good example of just showcasing to us that the Pi cycle top marks out tops, but they can be local tops, they can be market cycle tops. So in any case, really important to just focus on not the orange 111-day moving average, because we've been talking about this one quite a lot. Let's focus on the green moving average specifically, and let's make sure that I don't get this one wrong. The MA, the 350-day moving average multiplied by 2. And this is a really key MA in just denoting to us these bearish crossovers, but also just notice how this green MA tends to figure as a resistance. And once we break that resistance, we tend to see quite nice movements towards the upside. Here you can see a bit of a fake out beyond this resistance, but still a really important resistance area pressing down on price. Once we break it, and in fact you can see still a little bit of a rejection here, but overall weakening in this resistance, because we've seen a few pullbacks from here, weakening in the resistance, and then a break into a parabolic run up. So you can see that the green MA is really important in just dictating to us where could we reject, and then where do we need to break to enable further upside in a more parabolic fashion. So here you can actually see break beyond this green MA and then loss of it, but recovering above it. You can see that it turns into a support here and continues towards the upside. In the bear market, following the bear market from 2017, you can see that this green MA is actually a resistance that enables a further downside, a further correction. And here, once again, resistance at this green area, and here, this green area is actually lost as a support after an initial test of that support. So I think I've proved to you guys that it's really important to watch out for this green MA, and you can see that this green MA is probably going to figure as a resistance, or at the very least, we need to see it turn into a new support to enable parabolic upside. And this green MA is going to be a really important reference point for price going forward. And now that we've successfully retested the orange 111-day MA, now we're going to see a return to the 350-day MA multiplied by 2. And this level denotes the price point of around $82,000. So that's where we're probably going to see the next major resistance area, at least based on what we've seen in the past. $82,500 is going to be a major resistance, at least based on what we've seen in the past. But by the same token, this is going to be a very important level to flip into a support to enable parabolic upside going forward. So what we need to bear in mind as well is that I've spoken about this green MA a while back, but wasn't really important to that analysis back then. But I believe that around September, this was around 70K, roughly speaking. But you can see that this pi cycle MA is still inclining over time. And because we've seen price essentially just consolidate at around similar levels in the 40K region, 50K region, this inclining has changed the price of where this MA is going to be located at. And having said that, over time, if we enter a consolidation period right now, this figure is still going to change. It's very much like the Bitcoin logarithmic growth curves that I talk about in my Rekt Capital newsletter. These growth curves and this pi cycle MA is going to keep inclining over time. So it's really important to understand that based on Bitcoin's positioning relative to this MA, right now it's 82.5K, but it could be later on that we reach this MA and we could see that MA be actually a 84.5K price point. So still a lot of changes to be anticipated in terms of this MA, because 82.5K is today, but later on we could see this still change a bit. It is a moving target, but in any case, that's going to be the next major resistance most likely. But this is also going to be the level that needs to be turned into a support to enable further parabolic upside to new all-time highs yet again, into price discovery, getting us closer to 100K and beyond. In any case, guys, subscribe to the channel for more videos like this in the future. I hope you liked this one. Like the video if you did. I'm Rekt Capital and I'll speak to you in the next one. Speak to you soon.